BlackRock is a dominating force in the world of finance. They are the largest asset manager on earth, but is the company a good investment? In this video, I'll deep dive into the asset management industry and then I'll analyze all of BlackRock's key fundamental metrics. So stay tuned until the very end of the video to see at what prices am I buying the company. As always set with educational purposes and is not meant to be taken as financial advice. The ETF Universe has an astonishing 5.75 trillion in assets under management or AUM, covering almost every niche of the investing world. Equities are by far the largest galaxy in the ETF Universe, making up 76.4% of all assets. However, the fastest expanding galaxy is the bond ETF sector, which takes about 19.5% of AUM, and alternative ETF funds, which comprise of commodities, mainly take a 3.5% cut. Within the financial realm, there's perhaps no better example of this than the introduction of exchange-traded funds, a new financial technology that emerged out of the index investing phenomenon of the early 1990s. The first US ETF was established in 1993, paving the way for the passive investing revolution of the 2000s. When it comes to market share, the global asset management business is as follows. BlackRock is the leader with 33.64% share. Then comes Vanguard in a close second place with 29.6%, and on spot 3 is State Street with 14%. All others have less than a 10% market share. The expected growth rate for the industry, according to Global Newswire, is an astonishing 25.7% per year until 2027. Now I want to make up a deep dive analysis into all of BlackRock's business fundamentals. On the first two graphs we can see the long-term debt and the shareholders' equity. The beginning of the graph is 2009 and it ends with the end results of 2022. So the total graph is for a period of 13 years. The peak for the long-term debt was reached in 2015 when it was standing at $44 billion. Since then, the debts have fallen constantly over these 8 years, while the growth of the shareholders' equity is also constant. This is showcasing a truly well-run company from a debt perspective. The DE ratio in 2015 was 1.64, which was quite above the maximum level of 1 that we want, but now the ratio is only 0.33. This is a 5-fold betterment of the debt management levels. To follow up with some more debt metrics, the long-term debt to EBITDA ratio is only 1.13. This is a safe level, indicating with only a 1 year's worth of EBITDA profits, BlackRock could pay off all of their long-standing debts. The cash-to-debt ratio of BlackRock is also incredibly stable, as the total long-term debt is $12.5 billion, while the cash on hand is $6.8, giving them a ratio of 0.54. From a short-term debt perspective, it is also good to check the current quick and cash ratios of a company. Each one is optimal to be above 1, but the quick and cash ratios to be above 1 is quite rare and quite conservative. Most investors are only looking for the current ratio to be above 1, which will indicate the company's short-term liabilities are covered in full with short-term assets. Both of BlackRock's current and quick ratios are 10, which is very good. The reason why they're equal is that BlackRock does not have any inventory, as its business is not such a type. while even the cash ratio is above 1 with a 4.25. This means only the cash reserves of BlackRock are 4.25 times higher than all current liabilities. Another very nice sign for the company is that over the past 10 years they have constantly repurchased shares. The average amount for the period is about 1.7% annual decrease. This could be looked as an indirect return for all investors, as the repurchase of current shares makes all pre-existing shares more valuable. On top of share repurchases, the company is also paying a current dividend yield of 2.8%. As I have said many times, to see whether a dividend is secure and whether it will grow, we must check the dividend payout ratio, which for BlackRock is 0.53. Below 0.6 is considered a stable level. To summarize what we have examined until now, BlackRock is in a growing industry, which is good. BlackRock has a very strong competitive moat and it is a market leader in the asset management business. The debt management of BlackRock is very strong from all aspects, which makes the overall risk lower. BlackRock is also paving out a nice dividend, which is not only stable but has room to grow, and over the last 10 years straight, BlackRock has given out indirect returns to investors in the form of share buybacks. Let's now see the last two pillars, the efficiency of the company and its valuation metrics. The efficiency of the company from a ROE point of view is very good with 15.15%, the ROA or the return on assets is 4.66%, while the ROIC is 4.4%. All in all, the business efficiency could be better. From a net margin efficiency, the company is holding the level of around 30%. Over the long term, we can see a slight trend to the upside, which is of course nice. The most key valuation metric, of course, is the PE ratio, and it is best to see it with a longer time horizon to examine current levels in relation to historical ones. The following chart is a 13-year one. The current PE ratio of BlackRock is 21. This gives us a 4.76% earnings yield, but for a financial services company, which is quite established, I want to see a lower earnings multiple. Especially taking into consideration we're entering a recession and asset prices will have to come down, making the fee-structured business of BlackRock to suffer. BlackRock has a history of trading at around a 10 to 15 PE, and this is the maximum I'm willing to pay for the company. Most recently, the company was trading at around a 15 PE, and in my personal opinion, we'll surely see these levels again. However, I would want to buy the company at a level of around 12, but only if the fundamentals are not changed. For this, I am mainly referring to the debt, which in times of central banking liquidity hikes is crucial. I would potentially buy BlackRock if the company's stock falls by around 40%, but the other overall metrics for me are pretty good. Thank you for watching until the end, subscribe to the channel, and I'll see you in the following lecture.